Hello and welcome to our YouTube channel. As promised, we are back with our short come long trading tip after doing some great gold digging for you guys. So guys, if you are really liking our all the videos, then please do subscribe the channel and also share the video to maximum number of people and on all the social media platform. Also do praise the content creator Mr. Karan, who burns his midnight oil to do some great gold digging for you guys and also to the team. So a short-term trading tip for this week is buy SRF Limited. Buy at CMP rupees 5,500 around for a short-term target of rupees 5,800 in fortnight time, which is range-bound short-term target. Long-term target rupees 7,000 to 7,500 for a 2.5-year holding period. Fundamental analysis. The robust performance of chemical segment, which is 30% growth year on year and 25% quarter on quarter, led by specialty chemical business. The continuance of strong show of packaging film segment, which is 23% which is year on year and quarter on quarter, owing to health demand, and sharp recovery in technical textile segment sequentially, which is 3 and 136%, which is year on year and quarter on quarter percent, along with improved gross margin, helped SRF deliver 80% quarter on quarter growth, thereby beating estimates. The current momentum in specialty chemical business will continue in second half of financial year 2021 as well. Thus, the management has raised the year-on-year growth guidance for specialty chemicals from earlier guidance from 20% to greater than 25% for financial year 2021. Over the next 3-4 years, the company will deploy 50 to 60% of its capex towards high growth business of specialty chemicals to tap the opportunities emerging from the agrochemical and pharma industry. We expect over the next decade the specialty business to drive the growth for SRF. Besides, it will spend 20 to 30% of capex on packaging film business. We raised the target price to INR 5,600 per share, which was earlier INR 5,120 per share, owing to higher guidance and long-term growth prospect of specialty chemical business and capacity addition in the packaging film business. Bottom line is that the best is yet to come. So SRF's Q2 financial year 2021 performance was significantly ahead of consensus estimates on all parameters. Beat on consolidated revenue, EBITDA, PAT was to the tune of 14%, 44%, 58%. Consolidated margin expanded by 820 bps year on year. The strong performance was led by specialty chemicals and packaging film business. While the chemical segment revenue grew by 30% year on year, we believe that specialty chemicals growth would have been in excess of 55% year on year, considering the muted demand for refrigerant gases and others. During the quarter, SRF witnessed higher traction in the fungicides segment. The management indicated that there is a huge growth potential in agrochemicals, which is fluorination as well as other chemistries. During the quarter, the company introduced one new product each in agrochemical and pharma sectors. It also indicated acceleration of capex in the next 3 years. Majority of the QIP proceeds, which is rupees 7.5 billion, would be deployed in the specialty chemicals business over the next 12 to 18 months. The refrigerant gas segment was muted on account of lower OEM demand and pricing pressures in the international markets. We believe that the recent anti-dumping duty probe on Chinese imports and prohibition of ACs loaded with refrigerants will benefit SRF, a domestic market leader, meaningfully. Chemicals business can clock rupees 26 billion revenue, which is our financial year 2023 estimate, rupees 23 billion in the next 3 years, that is 2 times from financial year 2020 as per the management. Packaging business revenue grew by 25% year-on-year in Q2 of financial year 2021, while its EBIT grew by 90% year-on-year, led by higher volume of value-added products and enhanced capacity utilization. SRF announced capex of rupees 4.2 billion for adding a new BOPP in India over the next 20 months. Currently, all the company's facilities are running at full capacities except the recently commissioned ones. BOPET segment's margin will moderate going forward on account of capacity addition, whereas BOPP is looking favorable from a medium-term perspective. The management expects 3 to 5% moderation in packaging segment's EBIT margin from the current level, which is 31% in first half of financial year 2021. Recovery in technical textiles was better than expected on account of higher offtake from the tire manufacturers. Nylon tire cord fabric grew by 25% year-on-year in volume terms. Overall, we maintain our buy rating on SRF with a target price of rupees 7,000 in the long term for a 2.5-year holding period. After earning revisions and improved outlook. Now, the technical analysis. It has been observed that since the huge market crash of March 2020, the stock has rebounded well and given a consistent rise in the stock price. The price appreciation is exactly honoring the trend line and giving good returns momentum to the investors. The capital is managed effectively and efficiently, thereby the return to the shareholders is rising steadily. The ROCE is also consistently improving. The company is absolutely debt-free and has no promoter pledges. If anyone has to buy any share for long term, this is a must-have in good portfolio. Annual net profit and the EPS are both rising consistently. Currently, it is available at a cheaper valuation for short terms. It is trading around the lower end or support zone of the trend line. The trader can enter at around rupees 5,500 for a target of rupees 5,800 in mere 15 days. It is a stock on radar of most of the analysts and brokers. One has to buy now for short term as well as long term. Make a capital allocation of 50% for long term and balance for 10 to 15 days short term trading only. Its RSI on daily charts is bearish naturally, as the stock has fallen from its upper resistant levels to lower levels of support, but has respected the trend line well, and its RSI is 63 for the weekly charts. Therefore, it has seen a strong delivery momentum and a lot of genuine investors entering this counter. The MACD and short-term moving average crossovers are also consistently increased and are favorable for a buy considering trendline support, as long as the market support the bullish sentiments. This stock gives a stable return over year-on-year basis. So anyone needing to play short term can take advantage of 50 to 75 rupees price movement and take positional 7-day trade with a capital of 3 lakh to begin with and buy at rupees 5,475 to 5,500 and sell for rupees 5,800 to 6,000 for a cool gain of 20,000 bucks in a mere 8 to 10 days. Long-term target is rupees 7,000 to 7,500 range in 2.5 years, and it has to be seen that this company has consistently rewarded its customers and built a trustworthy brand and generated great returns for the shareholders. My suggestion will be to buy some capital for short term around 50% and some capital for long term 50% to make cool consistent gains. So guys, buy SRF at CMP rupees 5,500 for a target of rupees 7,000 in 24 to 30 months time frame. For short-term traders, it's a buy at 5,475 to 5,500 to sell for a short-term trend of 5,800 to 6,000. Any fresh breakout above 6,000 and close above 6,000 will open the floodgates for the stock to enter a new orbit and reach 6,500 and can reach 7,000 to 7,500 in 2.5 years holding period. Let's hope you're liking all the earlier videos. Also, our video on Happiest Minds Limited was amazing with the traders making big gains due to unforeseen volatility in the stock prices. The share of Piramal Enterprises Limited were recommended at 1,500 bucks merely a fortnight ago, and now the prices had hit 1,850 just yesterday. So that gave a cool 20% gain to my listeners in just 15 days. Anyone who would have bought 100 shares would have made a cool gain of rupees 30,000. So guys, that's the power of technical analysis. Do take efforts and learn the same and study maximum charts and identify such tips and like us, and do help people earn the same. Do help people earn through honest content on YouTube. I hope these videos build trust among the YouTubers for the stock market and the people raising their risk appetite. Continue buying after doing some thorough analysis and generating self-insights to earn in this market, which is unpredictable and requires a lot of discipline, time and focus to take a position or trade or investment. As said, concentration is mother of all the success. This market demands just that. So guys, be prepared for the risk and uncertainties, but if calculated risk is taken, then one can make 5 to 10 trades also per year and make a big profit, about $1 million, enough to meet his annual expenses. So keep at it and keep learning from your experience and learn from mistakes and past losses and learns. So guys, that's it for today. Kindly like my all the videos and also comment on the budget day video of option buying if you made a lakh of rupees. We'll be back with mind-blowing technical analysis and the very best of Hum Do Hamare Do season. So till then, stay tuned and thank you for watching.